Hey people, listen, if you're investing in index funds, I hope you've got your mindset right, because index fund investors need to be comfortable losing compared to others in the market. Now the thumbnail might be a little bit clickbaity, but the message is sincere, so please bear with me for a few minutes. If you're investing in index funds, you're simply never going to be the person with the biggest gains in the market. I mean, by definition, you've got a range of investments. The indexes, it represents that range of investments, and they're going to have bigger gains and smaller gains. The person who makes the biggest gains clearly is at the top. The person who makes the smallest is at the bottom, and the index is the average across the middle. So, by definition, you won't even be close to the person who's making the biggest gains in any single given year. So if you're the kind of person that's going to get irritated when you see others making a killing in crypto or trading options, or simply picking individual company stocks, then you need to think long and hard before you jump into an index fund, because it's a slow and steady race. It's not a sprint with index funds. There's always going to be someone who's doing better than you. But don't worry, I know that might be bitter tasting medicine for some of you to swallow, but in this video I'll be giving you a spoonful of sugar, maybe two, to hopefully help it go down. So if I think about index fund investing, or some ETFs for that matter, I know that I'm investing across the index or the market, and within that there'll be winners and there'll be losers, and I'm exposed to all of it. But it's a low cost way to be part of the market, and that's great. That's what I'm looking for. It stands to reason then that if you come along and you go all in on the one stock that goes 10x over the next 12 months, then you'll have seen a gain of 1,000%, and I may have only seen a gain of 10% from the S&P 500. 15 if I'm lucky, 0 is probably the reality this year. And I'm okay with that situation, because I know I haven't got the skill and I haven't got the perfect timing to get in and out of that sort of action consistently, year in, year out, over 10, 20 years. And I'm in good company, because most people don't. Even superstar investors like Cathie Wood can't do that across a prolonged period of time. For example, returns on ARK Innovation across the last 8 years are now lower than the returns across the S&P 500 for the same period. Now that's bonkers if you consider the ride that ARK has been on, and the fact it holds so much of Tesla, which we all know has been a phenomenal stock since 2020. Even with the recent sell-off, Tesla's up nearly 800% this past couple of years. So I can only imagine where ARK Innovation would be if Tesla hadn't had that much growth, or if Cathie Wood didn't have that much of it in the ETF. Also worth bearing in mind is the fact that unless you get in, or you'd got into ARK at the right time, 2020 or before 2020, then you'd have been mauled this past few months, because the sell-off has been horrific and not many people can actually sell at the top. But this isn't about Cathie Wood, other than to say her fall from grace just goes to show that even people at the top of the game, they smashed out the park the previous year, even they don't get it right all of the time. Yes, there are exceptions. Warren Buffett, Charlie Munger, Peter Lynch is 3 good examples, but I know I'm not one of them, and I'm absolutely fine with that. But look, here's the important thing. I'm not actually playing against those investors. I'm playing against the economy, and I basically want to stay ahead of inflation and consistently grow my wealth in line with my expectations, not what they're doing, not what you're doing even, against my expectations. That's what I've got locked into my mindset. That's where the bulk of my personal conviction is. So I don't really care how much others are making in the market, or what the latest investment trend is. I'm not chasing individual stocks on a regular basis. I don't follow tips. I'm not invested in cryptocurrency, don't get involved in options, and I certainly don't want my money actively managed, because I know how dangerous fees can be to compound growth. That's not to say I'll never consider some of those options. I probably will, to be fair. But if I do, it'll be with a small fraction of my portfolio to scratch an itch. And I'll come back to that in a minute, because I need to explain what I mean. But first, it's time for the sugar that I promised you. So on the one hand, we know that investing in an index fund or similar ETF will never make you a winner in any given year. There'll always be one investment or another that you could have made that would have far outperformed the index. However, on the other hand, we know that over time, 10, 15, 20 years, over that extended period, you are highly likely to outperform most fund managers. Never mind the random stock pickers and fad chasers that you'll come across from time to time. Unless they change their ways, their portfolios will be obliterated over time. Now let that statement sink in. Not the obliterated portfolio bit, the fact that if you invest and hold and maintain consistency with index investing, you are highly likely to outperform most fund managers. That never fails to impress me. I mean, the flip side is that most fund managers are going to look back on their careers and they'll have to make peace with the fact that the market beat them. Not so great for career satisfaction, I guess. But you know, I'm sure those fat fees more than make up for it. So look, you're not really a loser if you invest in index funds. That was unfair of me. It's more like you're prepared to let others keep your crown warm until you're ready to take your place on the throne as the investing king or queen. Okay, does that make the medicine a little bit easier to swallow? No? Still not sweet enough? Okay, well, I've got one more sweetener that might help. I know it's human nature to look around, see what others are investing in, what they're enjoying, and to start to crave that for yourself. FOMO, it's fear of missing out. It's a real phenomenon. And the psychological impact on behavior can be significant, and marketeers, companies, salespeople, they know this very well, and they're very familiar with how people tend to work, and they use it to their advantage. Have you ever seen something like this? Or maybe you've heard someone tell you that the course that they're selling is about to go up in price at the end of the day or end of the week, end of the month, because you get that sort of thing a lot on YouTube as well, certainly from a few creators. FOMO, it's really powerful and it really works. And I'm not immune. Remember I said before that I might dabble in other investment options to scratch that itch? Well, that's because I know what I'm like. I'm generally satisfied with a burger, who isn't? But every now and again, a steak would go down a treat. So I allocate a relatively small part of my portfolio to individual stock picks. In my case, it's about 10-15%. But I don't feel under pressure to be invested with that money at any given point in time. So it's often partly cash. Now, if we do see an opportunity that I think is just too good to miss, then I can pull the trigger and I don't feel like I'm jeopardizing my broader investment strategy, because I do think that it's going to be passive index type investing that's going to prop up my portfolio in the long run. Now, if I do hit a home run with one of my investments, then look out for the video where I bask in my own greatness. In all seriousness, taking the slow and steady road will be tough. You'll see people flying past you at 150 miles an hour all of the time. It will happen constantly, especially if you're on YouTube. But what you don't see is that 100 miles down the road, they've pulled over with some sort of car trouble. So take heart, don't get distracted, set your conviction and maintain it over the long run, because that's how index investors like you and I, that's how we're going to win. Now, if you enjoyed this video, slap the like button, subscribe if you want to see more videos like this. And if you're the kind of person that likes the idea of index fund investing, but knows you're still going to want your own individual stock picks, then check out this video, which shares Warren Buffett's thoughts on what he calls super investors. And you know, you might be one of them yourself. Until next time, peace.